how to do the pricing of an offer in case of frequently traded shares but through indirect acquisition. Again, the rule is going to be that the highest of the five prices will be the final offer price to be used by the acquirer for acquiring the remaining shareholders. So what are those five different prices? Those five different prices are: number one, same as in the previous example, highest negotiated price under agreement attracting open offer. So that's number one. Number two, volume weighted average price paid by the acquirer or by the PSC during last 52 weeks, and that is number two. Number three is same thing, but instead of 52 weeks, now you talk in terms of 26 weeks, and that is number three. And number four is highest price paid by the acquirer or the persons acting in concert between the defined date and the date of PA public announcement of the offer, and that is going to be the price of price for the fourth option. And then finally what you have, number five is a volume weighted average price preceding 60 days. So you will need to find out these five prices for the purpose of making for the purpose of pricing the offer for buying the shares of the remaining shareholders shares. You will have to find out this price, which is the highest negotiated price, this price which is paid by the acquirer or by persons acting in concert in last 52 weeks, and then in last 26 weeks, and then paid between the defined date and the date of public offer, and finally volume weighted average price for preceding 60 days. So as we saw in the previous example, you find out these five prices, and whichever is the highest among these five, that will be the price at which the acquirer will have to offer to purchase the remaining shares. And I'm sure you can very clearly understand fact that highest of these five prices is the basis. Highest of these five prices is the basis. That means it is taking care of the remaining investor, and they are not made to sell their stake at a price which is at a disadvantage to them. And that is how the pricing will be done in case of indirect acquisition for a company whose shares are not frequently traded. So this is your situation number three. In case if you have any doubt, any question, please go ahead and I would be happy to answer them.